Hi guys, welcome back. Here we go for another roundup of our price action trading levels for the week 29th of September to 3rd of October. Starting off with USDJPY here, you can see here that the price has been pretty much fixated for the last week around the 109 level, which isn't really surprising because this is quite a high level for this pair. So what we're looking for, as last week, we're looking for, in the case of a bearish scenario, for a bearish candle to indicate that this is a place to sell down from. We didn't get that at all last week. In the case of a bullish scenario where the price pushes on from here, you want to be looking for something like this. This is like a retest here. You can see here where the price came up and tested and then retested. So what you want to see here to take a long position out of 109 is you want to see it break and then come back and retest the 109 level before going long. Let this area show you that the price actually wants to go long. Don't just take it on a break. You know, you could have there's a break here on this candle. Let me just zoom in a little bit. But you don't know at this point in time if that's going to be a false break or if it's going to carry on. So you need to let it retest it before you continue with the long position here. So as I said, 109 level on USDJPY is your level to be watching this week. On EURUSD, you can see the level we had marked up here is the 128.35 level. It tried to do a little bit of a bounce here, but it failed. This wasn't what you would call a bullish candle. It was kind of a little doji, but a bullish candle will be something more like a pin bar or a bullish engulfing candle just here to go long out of there. So we couldn't take that one. So long trades from this level are out the window. So let's have a look and see what's going on further down. So what we're going to have to do for this is look to the left and see if we've got any support in here. So I'll just flick over to the weekly chart. And this is the weekly chart, and you can, if you look at these zones here, all around this 128.35 level, this is obviously, or was, previous support. You can see here the pair has totally blown that away. And the next level of real good support, I suppose you could call this level here the 127 level. Just here it had resistance and here it showed support, so you could throw that level in just there at 127, but we're actually pretty much through that as well. But you can possibly wait for a bounce up out of here, see what happens when the market opens next week. The only other thing you could do here is wait for a pullback up to the 128.35 level just here, and then trade this short with a bearish candlestick coming down out of here. You can see here this was previous support. So if this turns into resistance just here, then you can keep trading this short down from this level here. But at the moment, EURUSD is sort of breaking all lows. Obviously, the next lowest target past here is going to be either 123 or the 121.33 level. So it's quite a bit to go. So it'd be nice to get into a short trade out of here if possible. So where we are at the moment, look for a bounce here around the 127 level, or look for a short down from 128.35. On GBPUSD, you can see here we're at quite an interesting level, the 162.42 level. If you look to the left, you can see here previous resistance, these levels here, turned into support just here and support just here. We've come back and we've broken that level a couple of weeks ago. It's come back up and it's retesting it now. So if we see a bullish candlestick out of this level here, 162.48, then that's your signal to go long, as this may well continue back up to the 165.67 level. So this one's quite easy to see. 162.42 is your level to watch here. If we break under here, then obviously wait for it to break and retest before taking this short, possibly back down to the 159.35 level. AUDJPY here is quite an interesting one at the moment. Looking left here, you can see this previous resistance level just here and here, all the way through, and here as well. The price broke it, came back up and kind of held on to it just here, but did not did not bounce. Well, it did bounce, but it didn't actually continue with this movement upwards. But if you look very carefully at this, you can see a pattern. Can you see here this series of lower lows and lower highs that came down through here? And each of these lower highs just here are forming into pretty much the 50% retracement of this previous move down. So if you look at this move down here and this retrace back up here, this is around 50 to 61.8 retracement. And then if we look here, this movement down here, and then this retracement back here, it's into a similar level just here. So if you look at this candlestick here, it's showing a bit of bullish intent. If it comes back up to this level here, which is also where our previous resistance was, this could turn into again resistance just here, and it will also be a 50% retracement of that previous move down. So this level here, AUDJPY 96.16, or possibly the 96 level, watch that for a bearish candlestick to continue with this downward trend. On AUDUSD, you can see here well and truly broke this level just here, heading down now to possibly the 86.77 level. What you need to be looking out for here is pullbacks up to this level at 88.90 or 0.8890, 89 level, to trade this short back down to here. So if we get a pullback up to here, then short this down from here with the correct candlestick formation. If we just zoom out onto the weekly levels, you can see what's going on here. You can see, if we just take a quick look at this level here, you can see that it had support just here, support just here, support here, broken it here, and it's now coming back down to this level just here, 86.77, which, as you can see if you look over here, provided good weekly support just here and just here. So your two levels to look at on the daily will be shorting down from 88.90, or possibly looking at long from 86.77. On EURJPY, this is the level we had marked up last week, 139 level. You can see our previous resistance just here, resistance here, lots of support and resistance going on in here, and it actually broke this level here, and so this long scenario that we had as for a bounce here has gone, so that arrow can come away. You can see here it's broken through this level and it's come back and retested it. So if we see a bearish candlestick here, then that's the signal to go short on this pair. However, you can also see this level just here at 137.81, which is around about the 50 to 61.8 retracement of this big level here, this big move up here. So you could be looking also, if we drop down here to 137.81, for long positions out of here with the appropriate candlestick, as this is a retracement of this previous move up. So your two levels to be watching, the 139 level just here and the 137.81. On NZDUSD, I've got the weekly chart up here because this had a stonking candle last week of 300 pips. That moved down. It broke our level that we had marked for the daily, didn't offer any support at all. So if you're looking at the weekly, in fact you've got to look at the weekly because there's nothing else here on the daily. Your level you've got to be looking at is this point here, which is around the 0.7716 level for bullish candlesticks come to trade this back up. Now, if we take a look on the daily chart, you'll see how this level, this previous level just here at 79.45 was broken. It smashed through it quite easily, came back up, retested it, and it's carrying on down now. So you've also got another location just here. If we get a pullback up to this 79.45 level, then you could look for short positions back down out of there. This is on the daily chart, this one here. So your two levels to be looking at, you just move that arrow back up so we can see it a bit clearer. Back to the daily. Your two levels to be looking at here on Kiwi NZDUSD, 79.45 for shorts or 77.16 for longs. On USDCAD, this is the level we had marked last week, 1.0968. You can see it's destroyed that completely. This was a previous resistance level, didn't hold it at all, so we can remove that arrow there and look again. Let's see what's going on. Flick up onto the weekly chart. You can see that pretty much a high point on this pair at 1.12234. Let's just zoom out on that a little bit, see where that's sitting. Yeah, pretty much a high spot there. You can see this this bullish candle here on the weekly. So at this point here, 1.12234. Look for bearish candlesticks down from there. Let's just go back to the daily. There it is there. It's not that far away, to be honest. If you also look, if we get up to here and we pull back, then you've got another level to consider just in here, because this will be a 50% retracement of this move up. So if we come up to here and pull back down, then you should look for long positions for 1.10924, as this will be a 50% retracement of this move up if it gets up to here. So your levels to be looking at on USDCAD, probably not next week, probably be, well, maybe, towards the end of the week and maybe the week after, 1.12234 and 1.10924. So here's a look at the news for next week. Not much going on Monday. Tuesday, normal stuff. Wednesday is when it starts to get interesting. You've got the USD ADP non-farm employment change, which I'll come back to in a second. Thursday, you have the Eurozone minimum bid rate and an ECB press conference, so that's liable to make the euro a bit volatile. This will be Draghi talking about the minimum bid rate settings, most probably. And then on Friday, you've got the non-farm employment change, which is of course the one that everybody should stay away from. And in fact, we also have a German bank holiday on Friday. Now, if this is interesting, if you look at the non-farm employment change, what they're forecasting, last time it came in at 142k, and they're forecasting 216k, which is quite a big jump. There's quite a high forecast on the non-farm employment. But if you look on Wednesday at the ADP, last time it came in at 204, and they're only forecasting a 2k change on the non-farm employment change. So what you could be looking for here, to use the ADP as an indicator or a leading indicator into the non-farm change, if this number here, 206k, is massively different, i.e. if it's up around 300k, then I would expect that the non-farm employment change number will come in around about 216 or possibly more. This is the things you've got to look at. Sometimes when the ADP is massively different to what they forecast, either higher or a lot lower, that can in some cases give you a pointer to what the actual non-farm employment change will do. If the ADP comes in line 205, 207 or 206, then don't pay that much heed, as a guide to the non-farm change. If the non-farm comes in around in line or very, very similar to that number of 216, then the chart's going to get very, very choppy. If this comes in as a big number, then you could see a further drop on the EURUSD pair. So ones to keep an eye on this week: ADP non-farm, the ECB minimum bid rate, and the USD non-farm employment change. So that's it for this week, to look at our price action levels and a quick look at the news. If you like what we're doing here, then please click the like button, subscribe, or send us a comment, and we'll see you next week.